Also, what's happened since my last podcast was we had a huge breakout in silver and platinum. Platinum in particular, about 6 weeks ago, I did a podcast in which I specifically pointed out what a great buy platinum was, because platinum was under $1,000 an ounce and gold was trading over 3,000. So I pointed out that you could buy 3 ounces of gold with 3 ounces of platinum with a single ounce of gold. Now, for most of my life, platinum was more expensive than gold. So now, not only was platinum cheaper than gold, but it was so cheap that you could buy 3 ounces of platinum for 1 ounce of gold. And so I said, this is a ridiculously low price for platinum. And I specifically recommended that people call up Schiff Gold and buy some platinum. Well, yesterday, platinum traded for over $1,400 an ounce. I think it got to like $1,425. That was a 40% increase in the price of platinum just since I recommended it on this podcast about 6 weeks ago. Now, today, platinum was clobbered by $85. So it closed at $13.45-ish. So a big down day. In fact, all the metals had a big down day. Silver was down about 60 cents, or 75 cents, excuse me. But it closed at around $35.90. The last time I did a podcast, silver was still below 35, and 35 was major resistance. Well, we had a day between the last podcast and this one where silver was up almost $2, and it blew through 35 and went through 36. In fact, since my last podcast, silver almost traded $37 an ounce. Now, today was a big down day, 75 cents, and we closed the week just below 36. In fact, this is the lowest we've been since breaking out above 35. We closed at 35.90. Gold was also down about $60 today, closed around 32.75. The reason I believe that we had the weakness today in gold and silver, in addition to the fact that we've had a lot of strength in the stock market, and I think that's been a bit of a headwind, and that's why I think gold hasn't already made new highs, is because there's a lot of optimism now as people are moving back into these tech stocks, and so they don't feel as much of a need to have a risk-off hedge position on like gold. They're piling back into these risk assets. Was all the stories about progress on the trade front. Trump came out and said something about having a new deal with China. And look, I don't believe there's any deals going on. I mean, all the deals are is both sides agree to keep talking because they potentially might agree to come up with a deal or to agree on the terms of negotiating to come up with something, but they don't actually come up with anything, because really all they're trying to negotiate is to move away from what has been imposed since Liberation Day. We're just trying to bring the tariffs back down to where they were. We're trying to get China to open up its rare earths and its batteries and the things that we really need to buy from China that they were happy to sell us until Trump started this trade war. And now all we're trying to do is get back to where we were. But somehow this is going to be this great victory if all we can achieve is the status quo that we had before we launched a trade war that we couldn't win. But I think that talk, plus there was also something coming out of the White House that we're close to deals with Europe. We've got all kinds of supposed trade deals that we're about to sign. And this is just in time because the 90-day pause, right, that we instituted, that Trump called for after the bond market, started collapsing, getting yippy, in Trump's words. And so he called off the reciprocal tariffs. It was a 90-day pause. And that pause is maybe about 2 weeks from being up. And so I think the fact that the White House was floating the news, I think, started yesterday or this morning, that we're very close to these deals with a number of European countries or maybe the entire European Union. I think that not only helped the stock market rally today, but I think that's a reason that we had the sell-off in gold. So we had a sell-off in gold when, we had the ceasefire with Israel and Iran, and oil prices came right back down. They had spiked up to $75 a barrel, something a little bit higher, I think, and then they collapsed back down to 65 when nothing happened. and gold got caught up in that, and I think we got a little bit more selling. But the significant thing is that both gold and platinum broke out relative to gold, and they broke out above some major resistance levels. And I think this is a bullish thing. This is bullish for precious metals. It's not just a gold rally now. It is a precious metals rally. We've got all the metals rising, palladium as well. And in fact, copper, which pulled back today, copper was back above $5 a pound yesterday. Copper's up 25% on the year. So we're not talking about just a precious metals market rally, just a safe haven rally, but the industrial metals are going up. Why is all this happening? This is all happening because of a weak dollar. This is happening because of inflation, which is also ironic. And I'm going to get to that in a minute. But, you have such a weak dollar, you still have so many people talking about how inflation is gone, how the inflation problem is solved. Everybody in the Trump administration is talking as if we've already achieved the 2% inflation target, right? And nobody can figure out why this idiot, this moron, right, this numbskull, this very stupid person, and these are all specific words that Donald Trump has used over the past couple of weeks with respect to Fed Chair Powell, because he's saying that how could Powell be so stupid, be such a numbskull, be such an idiot, not to be cutting interest rates. And he's talking again about having to fire Powell, because after all, how could we allow this complete and total moron to be Fed chair for another year? I mean, once you've accepted that the chairman of the Federal Reserve is a moron, well, you got to get rid of him. I mean, how could you allow a moron to be running the Federal Reserve? And there is a lot of talk that Trump is going to nominate somebody like a shadow Fed chairman, maybe in the next couple of weeks. But the point is he may try to install that Fed chairman early and not allow Powell to serve out his term so that we can have rate cuts sooner, even though the Federal Reserve is indicating that rates are going to come down. Sometime between now and the end of the year, we're going to get a couple of rate cuts. So what's the point of even replacing Powell? And remember, Powell is just one vote. We had an FOMC meeting this week, and it was unanimous not to cut rates. So he's not the only moron on the FOMC. Apparently, they're all morons because none of them voted to cut rates. And I don't know how simply changing the Fed chairman is going to change the minds of everybody else, because supposedly these are independent thinkers. If they disagreed with Powell, if they thought that rates should have been cut, then they should have voted for cuts. But apparently, it's just a bunch of stupid people on the FOMC. Now, I got a lot of problems with the FOMC, and I think they've made a lot of mistakes, but not cutting interest rates isn't one of them. In fact, rates are still too low. They should be hiking interest rates, especially if you look at what's happening with the dollar, if you look at what's happening with commodity prices. It's obvious that inflation is bottomed and is headed back up. If we really had an independent Fed that was doing the right thing, they would not be talking about rate cuts, but about rate hikes, especially if you look at how Powell continues to describe the U.S. economy. And he did that again this week when he testified in front of Congress. So in addition, to not moving interest rates up, he testified this week, yesterday, the day before, in front of Congress. That's more what I wanted to talk about because that was more recent. But he talked about how great the economy is, and he talked about that at the FOMC meeting when they didn't hike or they didn't cut, and he talked about it in front of Congress, the House and the Senate. If the economy is so strong and inflation is still stubbornly high, if we're still above 2% and it looks like we may be headed back higher, why isn't the Fed hiking rates, right? If we got such a strong economy with such a strong labor market, which is what Powell maintains, and interest rates are still historically low, why aren't we raising rates? Why aren't we making sure that inflation goes back down to 2%? I mean, Powell is trying to get people to believe that inflation is just going to continue to fall back to 2% if we just keep rates where they are. Well, why should that happen? Rates are not historically high, but when you factor in what's happening to the dollar, and what's going on with the budget deficits and where they're headed, it's clear that inflation is moving higher, and what the Fed should be doing is hiking rates. But everybody is trying to pressure the Fed, and it's not just Powell. I mean, it's not just Trump, rather, but you've got the head of Fannie and Freddie, who has been going on a tirade, both on X and on, the financial news and regular news. This guy Pulte has been talking about how, the Fed is screwing up the housing market, that he's making housing more expensive than it should be, and he's keeping people from buying homes. He's keeping people from being able to sell their homes and buy new homes because he's keeping interest rates too high. What a lot of these guys don't get, like Pulte, is that if the Fed did cut interest rates, not only is there no guarantee that mortgage rates wouldn't go down, they'll probably go up. In fact, mortgage rates are higher now than they were before the Fed started cutting rates. Remember, the Fed lowered short-term rates by 100 basis points, but that caused a 100 basis point increase in long-term rates. So how do we know that when the Fed starts cutting rates again, that long-term rates might start rising again? In fact, that may be the main reason that the Fed isn't cutting rates. Maybe they realize that if they do cut rates, rates are going to go up, and they're afraid of that happening. They're afraid of the market realizing that that's going to happen. So the best thing they can do is nothing, because now they can maintain the delusion that they have the ability to lower interest rates. Everybody thinks that they can bring interest rates down, but if they cut rates and they go up instead, then everybody will know the truth. And so the Fed doesn't want the market to know the truth, so it just stands pat. And Powell is pretending that the only reason they're not cutting interest rates are the tariffs. We had this pullback in gold and silver today on Friday, a gift horse. I was talking with some of the guys at Schiff Gold, and they're telling me that one of the problems is that our customers are waiting for a pullback. They're afraid to buy a gold at 3,400. Why? It's just going higher. Don't be afraid to buy it. Same thing with silver. How can people not want to buy silver at $36? I mean, that's ridiculously cheap. I mean, yes, you could be upset that you didn't buy it at $25 or you didn't buy it at $30. It's not like I didn't tell you not to buy it, but I'm telling you to buy it at $37 because it's going much higher. And again, it's not that gold and silver prices are necessarily going higher. The dollar is going lower. And look at it. Look at it on foreign exchange markets. It's going down against all the other fiat currencies, but it's going to go down more against real money. So stop waiting for a pullback. And don't worry. Maybe days like today scare people. Oh, gold was down $50. Silver was down 75 cents. It doesn't matter. These declines won't even look, like a blip on a chart when you're looking back a few years from now. They're nothing. This is just noise. You have short-term traders that are getting in and reacting to the news, to the headlines. Oh, there's a ceasefire, sell gold. Oh, we have a trade deal, sell gold. When that happens, you buy gold, you buy silver. You're being given a gift. Take advantage of it. Don't look it in the mouth, and don't get greedy and hope for a bigger gift. Just take what the market gives you and buy these metals. I think the quick buy in platinum, like that big spike, I still like platinum, but it's not the steal that it was when I was getting you guys to buy it below 1,000, now that it's popped 40%. But silver, to me, still has a little bit of downside and massive upside. So you should be buying silver, calling up Schiff Gold, and getting yourself some silver. Also, the mining stocks, they pulled back again today, 3 or 4% drop on the decline. But all these stocks, again, even though they're up 45, 50% on the year, something like that, they are ridiculously cheap. People still don't get what's going on. They have no idea how the game has changed, what's going to be happening to the dollar. And so they don't have any idea how profitable these mining companies are going to be. So you want to be loading up on this.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers. But physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics, it's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming, young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.